The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and thank you so much for joining us. Today, we're going to be talking about the hottest carrier this summer. And actually, I would say it's of the last year because we've been seeing increasing growth with this carrier based on one fact, and that is the free benefits that everyone is coming to. And anytime that I speak with one of our sales representatives or independent financial professionals, we always go through the same talk, the same discussion. What are you doing different? How are you proposing this to your client? Are you just giving it based on price, or are you actually giving them a little bit more benefit? And when we make that small tweak, we notice that there is a big change in the amount of commissions that come in. Typically, clients are buying more. They're going through with the entire deal from start to finish with a little bit more ease. And when it comes time for delivery, going over these benefits is a huge selling point for that second time. We all know that when we're working with carriers today, just based on the time of underwriting, when we sit back down with the client, we really have to kind of almost resell that policy, re-go over that benefit, teach the client once more why they sat down and bought this policy in the first place. And by having a nice story in the beginning and a great story at the end, when it comes time for delivery, your clients will always be impressed. And I think it goes even further when it comes to asking for referrals. Before we begin, I just want to kind of start. We had an agent a couple weeks ago. He came in and he had a small term policy sell. By making some adjustments to his presentation and the product that he was able to offer, we were able to more than double the amount of money that he sold. So in fact, where somebody just was coming in with about $125 a month, no more, she actually sat down and went up to about $280 at the end of the day. So it is a great story that can really improve your sales and maximize that profitability with each customer while giving them added protection that they probably wouldn't have gotten anywhere else. A living benefit is just a small little option that the company gives them that lets them access their death benefit while they're alive. It lets the client basically go out there and build a pool of money that if they get sick or they are disabled or they have a terminal illness, they can go and they can access immediately to pay those bills that are really stressing them out today. And that's what it's meant for. Take the money that you have built up, have put aside, be able to recover if you can, pay the bills, and just get that financial stress off while you are in one of the worst illnesses that you may have received. So we're turning a policy that has traditionally benefited a client's family into benefiting the client and their family. So we are turning that over and creating a beneficiary that they've never had before. And living benefits are great if you're working with businesses. If you are talking to small businesses, if you're walking around, I'm going to tell you, any kind of networking meeting, any kind of group that I've ever gone to, we always run into the same life guy, it seems like, right? And when I say the same life guy, it may not be the same person, but it's about the same type of avenue. You have the guy that's sitting there and maybe he's a State Farm or an Allstate guy, and this is the insurance guy of the group, and if anybody needs it, they go to him. Or maybe they just have, a good old boy that's been with them and he's been selling the same products forever. Or you have that very high net worth individual that doesn't really deal or dabble with these small term policies. He's really focused on those bigger cases. And so by coming in and changing up that story and changing up with that Allstate guy that may be sitting there, that Farmers or State Farm guy is sitting there selling, or coming in and offering something more towards that middle to upper middle market class is really going to be well. And it does more than just protect the business if the owner or the key employee were to pass away. It protects them if they were to get sick as well. Who's going to pay the bills if the owner gets sick, if they have cancer, a heart attack, or stroke? I once talked to a business owner and he told me I had 4 heart attacks. And I said, wow. So after this last heart attack, how long did it take for you to get back into the business? And he told me it took me 2 weeks. And I went in, I wasn't feeling well, but I needed to make sure that the business continued to run. And the question I had was, if you were to have a plan where you could have accessed $500,000 from that fourth heart attack, would that have made you feel better? Would that have made you feel more competent that you didn't have to go in and the office could have just run a little bit longer without you? And he said, absolutely. And these are questions that should be asked when you're talking to small business owners. If they haven't updated their buy sell, this is a great plan to start speaking about them with. You got to update it. Let's talk about new figures. Let's talk about getting something in place where if your partner just gets sick and he needs to retire and he's going to exercise that buyout option, that you have the money. You don't have to liquidate it, because the only plan you have right now, you better kill your partner. Otherwise, you are going to have to come out of it with out of pocket. And we have living benefits for family, of course. We can use the money to pay medical bills, the mortgage, take time off to recover, cover the spouse's wages for support, or just pay long-term care expenses when they come up. It offers so many new opportunities. And American National, we have partnered with them, and we think that they have some of the strongest living benefits out there. And we have multiple carriers that offer living benefits. In fact, I can count probably 5 or 6 just off the top of my head. But the way that American National comes out in issues and the way that the American National takes a look at each of them gives your client a better bet. Plus, if you take a look at their portfolio, it is included on every single one of their life products. So it doesn't matter if you sell a term or a permanent plan or an index plan or a whole life, your client is going to continue to get them. So today I'm really going to highlight just the 2 main products that we are seeing kind of flow through the system. The 2 hot products that are selling with American National. And the first one's going to be their term. Obviously, term runs this business, right? It's very affordable. It's very easy to access, and clients just seem to like getting with a 20-year term or a 30-year term. It's a manageable number, and it's far off into the future. And when we take a look at the signature term, first off, a couple of highlights are there's accelerated underwriting. And you may hear this with a number of different carriers, but this is really the way of the future for insurance companies. They're kind of figuring out how this accelerated underwriting is working. We're going to talk about it a little bit later in this, but just rest assured knowing that if you have a well-qualified, healthy client, that they can get up to $1 million without taking an exam. They also have their own proprietary e-application, and unlike other companies, you can actually go through with a paper application as well. So if you are still kind of uncomfortable with e-apps, or you're just going to a place where you don't have internet connection, you can take a paper app and go ahead and complete it as well. They have some of the best conversion options out there for the clients. So if you're selling a policy for today, but you want to look out for tomorrow, as in a case that I'm working with a current client on, this might be a good option. Maybe we need to get a lot of coverage today and they just can't afford it in full permanent. So we're going to layer it out and be able to transfer more of this term into a permanent later on in life. And they have the riders that we just spoke about. They have the living benefit riders. They have a disability waiver of premium. They have a children's term rider. Now, if you take a look at your screen, you're going to see that the living benefits rider is free, just comes. There's no added premium. You don't have to mark an extra box for it. The disability waiver and the child's term are at a small cost that you can go ahead and add on. And the issue at ages out there, if you look at the top of your screen, you're going to see that you have your annual renewable term. And you know, one thing, I didn't build anything out on this annual renewable term. When we first got with them, I thought annual renewable term is probably going to be the last product I'm going to sell. Why would I go ahead and do this? But again, I was wrong. The way that they build out this product and their product line was just beautiful. So with the annual renewable term, we can actually guarantee a 10-year span of premiums for the clients. So it gives us a schedule of premiums that we know exactly what it's going to go up to the dollar every single year. And in the very beginning, it is very inexpensive. I mean, even less than the 10-year term. So what we've used this for is we've used this for clients that have maybe gotten raided. Maybe they have a bad driving history, or they were a smoker and they're in the middle of quitting, or they come back and maybe get a flat extra for something. Maybe they had a DUI 4 years ago, hasn't fully fallen off, so there's a small flat extra. And by using this, we're able to give them a very low cost premium. In fact, probably less than, again, that 10 or 15 year that we originally sold them on. And in a year, we reapply. And that DUI, we reapply or try and take that off, that flat extra off, and get them right back to that standard or standard plus rate. On the tobacco rating, we try and remove that, and then we go ahead and convert it over. Or, there's some kind of an issue. And so this allows you to be able to convert all the way over into a 20 or 30-year term, or even a permanent term within the first 5 years, but offer your client a very low cost. When speaking about business insurance, again, one great thing that you can do, we had a agent come to us, and it was a brand new business. It was only been out for about 2 years. And there was a young partner, and then there was an older partner. The older partner was there. He was kind of mentoring, putting in all of the money, seeing the day-to-day operations. The young guy, he's the one who pretty much went out there and put all of the energy inside of it. And when they took a look at the buy-sell, okay, they wanted to go out and they wanted to execute the buy-sell and create that in. The older individual, which was in his early 70s, the premium was just too much. I mean, the business couldn't afford it. They couldn't take that much cash out. Now, the young guy that was, in his early 40s, it was very affordable for him. They could buy a 15 or 20-year term, and I think the premium was like $80-some for what they needed. Well, with the annual renewable term, we were able to go ahead and insure the older individual right now without draining all of that capital out that they needed for that policy. And as the business would grow in the next 5 years, they could go ahead and convert that over into a permanent policy later on in life that would give them that more substantial, beef, that length that they were looking for. And also, we have some great issue ages. You can go up to all the way to age 70 on a 10-year term, or age 50 for a 30-year term, so up to age 80 years old. Now, 250,000 and below, you're just going to have standard non-tobacco to table 8. This is what's going to be called their express. We're going to talk about that. And it's available on the paper and e-applications. $250,001 and above. You have your preferred plus, preferred, standard plus, standard, substandard. And you have e-applications for their Express Issue Plus. Again, that goes up to $1 million from $250,001 all the way up to $1 million. And you have a paper application if the client just will, end up taking that exam initially. So you have both options out there, but we definitely recommend those e-applications just because it gives your client that shot at by being able to go ahead and skip over that exam. When I talked about conversion, this is what I mean. So the client can go ahead and convert to any individual permanent policy. On the annual renewable term, it can actually go ahead and convert over to the 20 or 30 year. In the first 5 years on a regular term, your client will actually be able to get 100% of their last annual term premium payable as a conversion credit, which means that it's really going to lower the price of their policy in the future. If I pay $1,000 this year and my conversion premium is going to be $2,000 next year, my first year premium on that conversion is only going to be $1,000. So it really spurs that client into making that extra sell, because that first year out of pocket is going to be discounted by what he paid last year. It's an amazing option for your client. Also, the policy is never to have less than 5 years of conversion. So if I buy it, let's just say now I buy a 30-year term, I can convert all the way up until the end of the 30 years, or I'm age 65. Now, if I buy it at, let's say, age 62, I go out, buy the policy, and I want to convert later, I never have less than 5 years. So in fact, since I bought it at 62, you just add 5 onto it, and I can go ahead and move all the way up until age 67 before I lose that conversion options. So it really gives me adequate ability to move into a permanent product later. And again, any permanent product. It's not a bad conversion product as you see as other people. It's not very expensive. They're going to pay the same rates that new healthy clients are paying today when they decide to exercise that. Now, the next product again that we see is the Signature Guaranteed GUL with the cash out rider. And I'm going to really focus on that cash out rider because I'm going to tell you, even though we think that it's something just ordinary, it isn't. And in fact, one of the largest cases that I have worked on this year really was sold. The client ended up moving over this way because of that guaranteed cash out rider. So it's not your average GUL. Average GUL comes out and says, I'm going to go ahead and give you the death benefit for a low cost forever, right? Till whenever you want it. Well, over here, it's going to give you the access to the premiums that you've paid, right? The access to the cash if you want. It's going to go ahead and give you the living benefits that have been built in. So again, critical illness, chronic illness, terminal illness, or death, your client's going to be able to get money. And you're going to be able to go into the death benefit plus, and that's what the Signature Guaranteed Universal Life is. It also lets you dial out the guarantee. So if you have a client and maybe longevity isn't fully there, you can go to age 95 or you're really trying to drive down that premium, you can pick the lower age guarantees, or you can go all the way up to age 121. So it gives you adequate range and control to be able to play with the policy to fit it to your client's needs. They have a minimum face amount of $25,000, so it's a very low cost policy. I'm going to tell you, if you have a healthy client that's maybe a little older, right? You have somebody 65 or even 70, and they're looking for a final expense policy, but maybe they can't afford or they need more than one of the traditional final expenses. Sell them this. Oftentimes you'll find that they can get 25 or 30,000 for the same price they were going to pay for 12 or 15. So you're more than doubling the benefit to your client by offering them this product. You're also giving them those living benefits, that access, plus you're giving them a return of premium feature in the future if they need it, all for the same price they were going to pay for that traditional final expense. Again, this is a great policy for that 25,000 minimum, or that healthy client. You can issue this all the way up to age 80 with non-smoker, or up to age 75 with non-nicotine. You have that guaranteed death benefit, and the cash out riders are going to be in the 15th, 20th, and 25th year. So they're giving you a little bit more than what you see with other companies with a similar option. So you're getting more options and availability for the client. Plus, they're going to give you two different ways. This is how the cash out option works. So the first way, if it's $250,000 and below, in the 15th year, your client is going to get 50% of the premium, or up to 45% of the death benefit. In the 20th year, they're going to get 100% of the death benefit. I know there's carriers out there in the 20th year, you're only getting 50. Here, you're going to get 100, or 45%, whichever's less. 25th year, again, they have the third time to exercise that right and make sure that they want to stay in the policy or not. So it gives your clients 3 different times to come in and exercise that cashback option. And if you're working with somebody right now and you're selling them a mortgage insurance plan, this is an awesome bet. You have somebody with a new mortgage, go ahead and come in with the premiums and the actual overall amount. You'll find out in the 20th or even 25th year, they'll be able to completely prepay or pay off their mortgage with that cashback option, and start putting more money in their pocket. It's a great little savings plan in that aspect. With benefits of $250,000 and over, it's actually a little higher. It's 65% the 15th year, or 65% of the death benefit. In the 20th year, it's 100%, and again, in the 25th year, it's 100%. So I'm going to do a hypothetical example. We have a client to age 65, non-smoker. He buys $500,000 to age 105. All right. In the 15th year, if he decides, you know what, I don't want this anymore. All right. I'm now 80 years old. I need to get out of this. I need the money for some reason. Well, in this instance, he's put in $202,000. he would get back 65% of all premiums paid, $131,630. He waits till year 20. Now he's 85. Maybe he wants to exercise it now. Maybe he bought this as a pension max for his wife, and his wife ends up passing away. Well, again, he's not just lost all of that money that he's put in, which would have been $270,000. He can actually exercise that at 100% of return of premiums, and he gets back $270,000. Now, finally, in the 25th year, he's paid a little bit more into it. He's paid $337,000 in. 65% of the death benefit is $325,000, so they would go ahead and give him that $325,000 death benefit. And if we go and compare it to other companies out there, you're going to see American National is very attractive. We're looking at very low costs when it comes to the premiums, and we're looking at very high returns when it comes to giving the client the money back. So this is a powerful combination when you're sitting down with clients. And again, something else you should be bringing to the table if you're talking about permanent insurance. Having that flexible option of getting out, again, was one of the big factors that the client liked on a policy that we sold this year. One of the biggest plans that has come through the office. And why was that? Well, he sat down and he said, I like knowing that in the 20th or the 25th year, I have a exit plan. Maybe my money isn't tied up. Maybe there's a change in the market, or I need to get something back. I know guaranteed I'm going to have this. And if I want to continue with my plan, I know guaranteed what my premium is going to be. So either way, I am safe. I am protecting myself, and I am protecting my family. So do not discount this when you're talking with your clients. Now, when we talk about the accelerated underwriting, we're going to talk about the Express Plus and the Express Underwriting Program. So what it is it's designed to help get your healthy, well-qualified clients out of the underwriting process as quick as possible. You've probably seen other companies come up with this type of program. Some companies are coming up to $500,000. American National is coming out all the way up to $1 million. Now, it's not a simplified issue program, and don't consider it completely non-med. It's still fully underwritten, and the client could be asked to go and take an exam. The carriers will go out and they actually run your client through a series of different databases. They run them through MIB. We've all known about that for a while. They've run them through the prescription drug check. I think that's been around now for, oh gosh, maybe 10 years plus. I think that was one of the new things when I was first coming into the business. And finally, we have the life risk classifier score. Now, the life risk classifier also includes the motor vehicle record. I'm going to talk about that a little bit more in depth coming up. Now, the Express Plus, $250,001 and above, it can go from 18 to 60. From 18 to 50, you get up to that million. 51 to 60, up to $500,000. The e-application is required. So if you really want to go ahead and try and get your client through this system, you're going to have to log into American National's website, go through that Expert App system, which is absolutely easy. In fact, I did one with one of our agents yesterday. We walked through from the very beginning to the very end. They had the client on the other line, and I was kind of sitting doing a screen share, and she turned to me and said, I thought that was going to be way harder than it was. She says, that was the easiest app I have ever taken. I'm going to do this from now on. And the reason why is she wasn't searching through the app or trying to figure out what information was. On brand new applications, it is probably the best way to push them through. The underwriting classes that are available from the Express Plus, you can get all the way from Preferred Plus all the way down to Standard. Even some substandard cases in some scenarios. Now, when you're going through the Expert app, there's a couple of do's and don'ts. First, do not list that the exam will be ordered on the app. If you do, then the company will say, great, they've already ordered it. You're not going to be qualified for the Express Plus. Just leave that blank. Do not mark that you haven't or that you have. Just leave it blank and move forward. When you're using the Expert apps, if the answers prompt the need for an exam, you'll be notified immediately. So maybe there is some health history that popped up and the app now knows. It's going to go ahead and let you do it. And just as of last month, they really made a big upgrade to the app that's really going to help push that through a little faster and give you kind of more notification that'll help speed it through the underwriting, stop the back and forth, and just ask you for more details if there is some health information. When it's going through the underwriting, even if it doesn't initially tell you that the exam is necessary, if the underwriter spots something when they're running that MIP or the RX or that life risk classifier score, they can come back and request one once it's initially reviewed. Again, this is very similar to almost every accelerated underwriting program out there. They are really just kind of focused on a few key details, and if your client doesn't meet those criteria, we do have to go back and talk about an exam. So what I do is when I'm sitting with my clients and I'm writing this type of policy, I always let them know, hey, there's a small chance after the application, there's a chance they may be able to get this through without needing to take an exam, but they could come back and request one from you. Now, when I sell this plan, I never tell them that they never have to take an exam. I tell them that the exam is going to go from the very first time that I'm talking to them about it. After the app, if everything comes through, then I go ahead and give them that small chance. I tell them, I'll give you a phone call in about 2 days, and I'll let you know for a fact if you have to go ahead and schedule that. Somebody will be giving you a phone call, or if your policy is ready for delivery. And in most cases, my clients really understand and sit down and go with me. The time that they get mad is when I tell them no exams needed. Then I have to give them a phone call and say, well, actually there is. So make sure just to go ahead and lay that out with your client in the first place. For $250,000 and below, issue ages 18 to 65, it can be done on paper or e-app. So if you don't have an internet connection, you're writing 250 and below, that's fine. Also, you have some underwriting classes that are available, which is just standard. That's the best that you can get. You can go again some substandard in some scenarios as well. Again, on the Expert e-app, do not list that an exam will be ordered. Otherwise, they're going to go ahead and wait for one to come in. And when going through the underwriting, they can come back and request an exam. I am going to tell you, though, on this life risk classifier that I'm going to talk about, 100,000 and below, it is not run. So the chances of your client going through fully non-med is going to be even higher if it's 100,000 and lower. So if you're working on the smaller policies, great place to go. Also, if you have some clients that maybe have an EAC card or an ITIN or something like that, give us a phone call and we'll let you know how you can actually work with American National and get them covered today. So the life risk classifier. This is kind of a controversial topic right now. We're seeing a lot of companies come out with this, not just American National. We have, like I said, I could list probably about 10 off the top of my head, major companies that are doing this in the background. Some let you know, some do not. Some agents are oblivious that this is going on back there. So what the life risk classifier does is it's almost like a insurance credit score. In fact, your car insurance uses something very similar to this. And now the life insurance is taking this in as well. But it takes a number of data points that are out there. And you often hear about this data, on Facebook or Twitter or Google. Well, there's other companies out there that gather just as much data, if not more. And they have companies that now put these into like a standard score, very similar to a credit score, but this is your risk score. It includes things like driving history, credit history, living arrangements, payment history. I think it's like 32 different points in there, and it pops out a number. Now, from that number, they go ahead and give that over to the insurance company, and if your score comes in, just like a credit score, you have your great, your moderate, and your low. If your score comes in moderate or low or moderate, your client's going to have to take an exam. They're just going to have to go ahead and go through that. The company's coming out and saying that this guy may have a little bit of extra risk. They're going to put him through the exam process and come back. If it's moderate or better, there's a great chance that they can still go ahead and get that preferred plus, even if you're quoting it. If they're in that great range, they're in that awesome range, that green range, then they're going to just go ahead and push them through. There's nothing else that's going to be needed. They're going to say, well, he's probably good in the exam area. He's probably taking good care of himself here, here, and here. I'm just going to go ahead and issue it. In those instances that where life risk classifier scores are coming in that green range where there's no exams needed, we're seeing policies coming out the door within 2 days, getting that approval and push to issue. So just know that if we do have those well-qualified clients, and that's what I'm going to say, well-qualified. Sounds like a car commercial, right? I go in to lease something and they say, well, this is for well-qualified clients. It's $600 a month on this lease. But since your credit isn't so good, maybe it's going to be $650. You're going to have to pay a little bit more. Same with car insurance. I go in, I get a low quote. They find out my credit score is not the best. Well, maybe that quote's going to jump up. Life insurance is moving in that exact same way. And our clients really have to start getting used to this. Newer clients doesn't seem to bother as much as the older clients, but it is something that we do have to talk about when it comes time to it. So I just want to let you know, again, this is nothing new. A lot of other companies are going out there and doing it just behind your back where you may or may not know, and that's where they're coming out with it. So just be aware of how that works. So some of the other products that I spoke about on the life insurance side that are offered, but I did not speak about, are the Signature Index Universal Life. So if you're looking for cash accumulation, they have a great index plan out there. Again, living benefits. They have a Signature Whole Life. This is a participating whole life. Participating just means that every single year the client can get dividends. So the company is going to come out and it's going to give them a little bit of money, and they can use that for cash accumulation, to buy more insurance, a few other things. Then we have the Simplified Issue. This is more of a worksite product. The Simplified Issue is if you have, really groups of 20 or more, you're going to go ahead and enroll 10 plus lives into the plan. It's 3 health questions, no exams, no LRC. Very, very simple to do, and I have seen wondrous things work with that Simplified Issue. And same commission, no cuts in commission to you. Also, annuities. They have some annuities that are out there, and that's actually going to be on the right-hand side under the retirement column. They have their Palladium MIGAs, multi-year guarantees. You can go ahead and guarantee out your clients' interest rate from anywhere from 5 to 10 years. They have their Citadel products, which are flexible premium annuities. That allows for future contributions. If you pick their 7-year plan, you have 7 years and you can go ahead and put in as little as $100 every single month. And it's just a nice way that you can grow interest and protect it from the market at the same time as building some kind of a retirement in the back end. Great, great plan. You also have your Century Plus. Again, it's a fixed annuity, but this time it has an optional lifetime income rider. So for your clients that want no index or market movement at all, they just want something that is safe, secure, and steady. And then finally, we have our index options with the Asia 7 and 10. Beautiful options, multiple allocations, and again, has the optional lifetime income rider. Also, if you have never even talked about pensions because you've never been securities licensed, no more. You can actually start selling to small businesses or self-employed people right now. No securities license are needed. You can set up a simple IRA. You can set up a self-employment retirement plan. You can set up a 401k. I mean, there's so many different things that you can do for these small businesses today. You can even take over an existing plan if necessary, and you get paid the commission with no securities license. You take a small little questionnaire from American National, you send it in. They will help build the entire plan. They will even help you explain it with your client over the phone. And if necessary, your client says, I need my CPA or maybe my attorney on the phone, they will get their own ERISA certified attorney on the phone with you to help you make that sale. If you've never looked at doing small businesses like this, it's a great time. And when that DOL ruling that scared so many of us in the very beginning, that we weren't unsure how annuities were going to play out, we saw many of the big names, the Fidelities and the Schwabs, get out of these smaller groups, 35 and down. So that left a big gap that American National is now filling, and those companies are not coming back into it. So if your client had one of those plans and they're not really being serviced the way they are, they can lower their fees, get more back office than they had before, and you're able to switch that over to yourself. Something that you should look at, and if you want to know more, give me a phone call. And I'm going to just finish with the accelerated benefit riders. Again, it's on every single one of the products. It's automatically issued to all of the life policies that are out there, and some states may have some variations. But we either have a partial acceleration or a full acceleration, meaning your client can accelerate 100% or even 5%. It doesn't matter, but it gives them the option and the control when they need it the most. Has great benefits, and the clients are not required to take it in installments. They can take it in a lump sum if they want. And it's giving your clients more. It's another reason for your client to buy a permanent or a term life insurance policy, and it comes at no additional policy to the premium to the client. Again, there's no minimum. You can take out, again, 5% all the way up to 100% and every number in between. It's not subject to a yearly cap. So if they have $1 million policy and they want to go out and get $1 million, they can accelerate the full $1 million. And acceleration can actually even happen multiple times per year if that persistent illness keeps coming back, or a new illness or chronic illness comes back. They can come back and do that. The chronic illness is very simple. You can't perform 2 of 6 activities of daily living for at least 90 days, or you have severe cognitive impairment, Alzheimer's, dementia, and the activities of daily living are bathing, continence, dressing, eating, toileting, and transferring. If they can't do at least 2 of those, they can go in and dive into their policy, and they can actually do that once every 6 months, I believe it is, 180 days. So twice a year, they can go and pull the money they need to live and survive. The accelerated benefit for critical illness, they actually have, I think it's 18 different triggers, 16, excuse me, 18 if you include death and if you include the chronic illness we just talked about. But it's triggered by some specific critical illness that are out there. There's 16 different triggers for the critical illness. Most other competitions only have 6. The way that it looks, slide is a little funky there, but we have heart attack, stroke, cancers, kidney failure, major organ transplant, ALS or Lou Gehrig's disease, blindness, paralysis, atrial aneurysm, central nervous system tumors, loss of limb, major burn, severe disease, major multi-system trauma, AIDS, severe central nervous system. These are things that we deal with on a daily basis. We have all known somebody that has had a heart attack or cancer or stroke. I know many people that have had to go onto kidney dialysis. These are things that are going to affect people, that they can now access that pool of money, that bank that's been in the back that they've only been paying $50 or $60 a month to have, and start getting money they need to survive. The terminal illness is also great. It is for life expectancy less than 24 months. Again, competition is usually 12 months or less. Now we're going 2 years out, and it's giving more money into their pocket when they do those accelerations. So that's it. I'm going to go ahead